Hi, this is Narasimha Kumar. Welcome to the Akshaya Money Management for the March series. This month, let us see the 4 topics. 1, what are the problems what we have right now in the stock market? Number 2, do we have any opportunities to invest? If yes, where? And 3, if market going to crash, till what levels it can go and sustain? And number 4, what should be your strategy? So let us start one by one. So as we all know that there's a boundary wars is happening. Because of that one, we are seeing the commodity prices are going up, inflations are increasing because of the commodity prices. And in this March, US, they said they're going to increase the repo rates. That is also. And last is FII's flow. Mostly that is the most important to the Indian markets. Not because of somewhere war is happening, not an issue to the Indian markets, but Indian markets, a major war is happening in between DAs and the FIIs. That is the reason if you see from the last 6 months, the graph is going down. So market does not know that after 6 months, war is going to start. But why market has started falling from the last 6 months? If you understand that one, you'll get the answer for all the other questions. There's always a fight in India in between FIIs and DAs. No doubt, DA is also investing every monthly basis, but market is not going up. The reason is, if you see, FIIs had removed 1,87,000 crores in the last 6 months. No doubt, India has also invested 1,35,000 crores, but net to net, if you see, outflow is more than the inflow. So that is the reason we are seeing that from the last 6 months, market is in the downtrend. So, and what is a good time to enter? So now after 10%, a lot of people start calling me and saying that, sir, is it a good time to invest because 10% market fall? So one indication what we follow in Akshaya Money Management is price to the book value. So what do you mean by price to the book value? You take all the 50 Nifty average, what is the price, divide by the net asset of all the 50 companies. You will get the ratio. That ratio called as a price to the book value. So we always see, if you see the past 20 years, this is the price to the book value. You can see the dark color. So whenever the price to the book goes above 4, there's a danger zone. So from there, we are seeing the good correction happen. So we expected after 4.4 hitting right now, it may go to 5, but because of this war condition, it started going down. So if you see what is the average medium for this PB ratio is 3.5 is a good average. I'm not saying that very good to enter, but 3.5 is the average. If you say when will be more aggressive in equity and when we will do profit booking, this is what we follow in our Akshaya Money Management. Whenever it is more than 4 PB ratio, there's a time we expect there's an expense market is there. We do the profit booking. So if you see in January, February, for all our customers, we have done a profit booking. So last 2 years, we have seen the 40% to 50% rise in the stock markets. So those all things we have done a profit booking. And we are not zero in the equity market, but yes, we have how much we have it. I will let you know it. So if you have a PB ratio in between 2.75 to 3.5, that is a fair value. Okay, this is the way you can do the STPs, SIPs in this one. If it is less than 2 or near to 2, there's an aggressive, you should sell your house and enter into stock market. So right now where we are, is it a time to enter aggressive in the stock market? Let us have a look into this one. And this is, we not only we follow, FIs also will follow. So let us see how I can correlate with that one. So let me go back to 2014. From 2014, if you see February, the PB ratio is gone down to 2.85. And they always compare with the one more factor called as a dividend yield. So if you see the trend of the FIs, whenever the dividend yield is more than 1.4 and PB ratio is less than 3.5, that is the time they are entering into the FIs in the Indian markets. If you see this time, February 2014 onwards, they are increased the investment in Indian markets. For you and me, maybe India is the only one country to invest. Whereas for FIs, if wherever they see the valuations attractive, that country they enter into the market, and whenever they see the valuations are high, they exit from that one. So there is a what happening into the current scenario. Again, after 2014 they enter, they felt that 2015 again PB ratio is gone higher than the 3.5. You can see these levels. They started every month basis. They started removing the money again. 2016, when they saw again price coming down less than 3.5 pp, you just see it every time they start entering when the PB ratio is less than 3. When 2.8, the aggressive comes and start investing into the market. Some 35,000 crores, 10,000 crores in 1 month they'll come and invest into the market again. But if you see from 2017, 2018, and 2000 up to 19, the PB ratio never came to less than 3.5. So they never came back to invest into the Indian stock markets. If you see net, if you see 2017, the 44,000 crores they removed it, and 2018, 73,000 crores they removed it. In that year, if you see 2018, market has given hardly single-digit returns, and same thing in 2019 also. But after again the COVID time, 2020 March, when again PB ratio came lower than 3.5, that is the time where we saw 2.1 as a PB ratio. They came left, right, center and started investing into Indian markets. So these are the people will see the value and start investing it. And before you and I exit, common man, they exit and they'll get out. There is a what happening in from the last 6 months. Last 6 months, no doubt, our Indian markets used to invest into the market, but FIs started removing the money before 6 months. So if you ask me how much market can go down, so this as soon as it became 4 and above, FIs started removing. There is a what I can say last 10 months onwards, market FIs are continuously removing the money. So if you see current level, we touch almost a 4.4 highest in the month of Jan. After that one, we started going down. Current PB ratio is 4.1. So if this war continues, maybe for 15 days or I don't know, 1 month, then yes, we may see the prices coming down. If it comes below 3.5, then again FIs will start coming to Indian markets. So one thing, let me know it, without FIs support, India cannot reach the higher levels, and new levels we cannot touch. To touch 62,000 only, we require some support. And to go more than 62,000 Sensex, definitely FI support is required. Otherwise, every month if they start removing like 40,000 crores, definitely we'll see markets going down because we don't have so much money to dump into the Indian markets. Third thing is opportunities in the market. So what I said, the negative is the opportunity again. For example, US repo rates hikes. When repo rates hikes, obviously India also will follow that one. So your bonds will do very well, and your commodities, since commodity prices are going up, so who is stopping you to invest into the commodities like gold, silver? If you are a commodity trader, you can look into nickel or copper or iron. These are the commodities is going all-time high now. So ideally, if you say this is a time not to be aggressive in the equity markets, you should make asset allocation of your portfolio. You should have no doubt equity. Along with the equity, you should also have the silver, gold, you should have a bond, and also you should have a debt funds. So this combination will give you a cushion for this current year. Otherwise, the way the markets are going, if you are there in equity 100%, I will say don't see the 10% fall, but who knows if another 10% also can correct. So be cautious. If already are in the good profits, do profit booking, and stay staggered manner of investment is always a better. So hope you like this information. So please subscribe and share it. Thank you. And let us meet in the next month. Bye.